Hello everyone, welcome to the Sweeney Show, Business and Law Podcast. My name is David Sweeney and joining me here today is Trevor Kelly. Trevor is a loss adjuster with insuranceclaimsolutions.ie. Trevor, you're very welcome.
Thanks very much for having me on, David. Don't mean to sort of start the interview. I'm a loss assessor.
Loss assessor. Well, that was kind of my first question. So what is the difference between a loss adjuster and a loss assessor?
Well, there's two distinct differences between the two of them. So a loss assessor is in policy property claims expert who works exclusively on behalf of policyholders, advocating for policyholders' interests. They're regulated by the central bank, and we handle the interests of the insured party, the policyholder, be it a home business owner. So a loss adjuster is what it says in the tin. It's a loss adjuster. So they adjust the loss in line with the policy conditions. They're employed by the insurance company. Their job is to make sure that the insurance company's interests are looked after and that they're not paying for anything they shouldn't pay for. So their role is to represent the insurance company.
Okay, well look, sorry for getting us off on the wrong footing there. So Trevor's a loss assessor. How do you become a loss assessor? What's your own personal history and educational background?
Yeah, so myself, I have a degree, a building surveying degree from DKIT, Dundalk Institute of Technology. I graduated in 2005. I came out and went straight into the insurance claims industry with Property Claims Direct, a branch of Bruce Shaw, based in Dublin. So I went in there for 4 years, worked there. 2009, I went out and started my own company. Insurance Claim Solutions was bought in the middle of the recession, so we have a lot of steep learning very quickly. I'm a member of the Society of Chartered Surveyors, associate of the Royal Institute of Chartered Surveyors. I'm a member of the Insurance Institute. I'm a Certified Insurance Practitioner and a Diploma In Loss Adjusting. I suppose over the last 15 years, we've built Insurance Claim Solutions to be a specialist niche loss assessment company who handle claims on behalf of large business owners and property owners. So I suppose to become a public loss assessor, what you have to do is you have to meet minimum competency from the central bank. So what you have to do is you have to have your insurance qualifications. That's the minimum competency to get regulated. Because they're regulated by the central bank, you have to satisfy the central bank that your qualifications are in line. But the standard for becoming a loss assessor is quite low. It's a minimum competency. It's 6 exams with the Insurance Institute to give you the financial education to become a loss assessor. You have to then get advocates from the industry to second and third your application. But that gives you the minimum competency to become a loss assessor. So I suppose loss assessment is very much based in insurance law and insurance policies and contract law. But I suppose what you're dealing with on a daily basis is people's properties that are damaged. So really, whilst loss assessing and whilst insurance is very important, probably you could argument that the building surveying aspect of it is much greater. So because you're dealing with properties, damaged properties, what happens when a property gets flooded? What happens when a property gets fire damaged? What's the correct procedure for identifying primary damage and secondary damage? And how do you go about compiling and formulating your policyholders' claim to make sure that you protect your policyholder and also protect yourself with your own professional indemnity insurance? So it's knowing how to treat a damaged building and knowing exactly how to deal with the consequential losses from that too.
So can I take you back then? So Insurance Claim Solutions, when you set that up, what spurred you on to set that up at the time? Did you have an entrepreneurial spirit, or what was the trigger to make you go out on your own?
Well, it was 2009. There was a lot of stuff coming down the line. We were after going through, I think, a year or two of bank resolutions and recessions and bits and pieces. I don't know whether it was my father was an entrepreneur, or sort of didn't call him entrepreneurs years ago. He was a business owner. He built a business from nothing up to 15 employees, sort of a car repair based in Dublin. So I always knew from the very start that I always wanted to do something in business, and I was very interested in how businesses worked and not just the technical function of it. And I suppose thankfully when I was in school with business, I was always one step ahead because I knew how to write a check, I knew how to lodge, I knew how to do bits and pieces. So a lot of the stuff we were learning,
practical
fundamental
business things,
already covered off. But I said 2009, I decided, listen, this is the year. Like, what's the worst that can happen? So I put a plan in place, I put structures in place, and thankfully we're still here after 10 years, or 11 years or so this year. And building year on year, building on great service, great performance, and sort of customer service. So that's really been the key to it, David.
Yeah, and so what circumstance or when would I actually hire a loss assessor?
Yeah, typically, loss assessor will handle your interests in relation to property material damage. So if you have a fire in your home or business, if you have a flood in your home or business, if you have storm damage, and funny enough now, with the coronavirus coming in, there's business interruption claims that we're handling on behalf of property owners, dental practices, hairdressers, restaurants, pubs. So there's a lot of talk in the industry now about different insurers going to court and test cases and bits and pieces, but there's a certain cohort of insurers who actually have decided to pay up, a small number of them. So we've been helping policyholders to basically formulate, compile, then claims, negotiating, because I suppose when you think of an insurance claim, there's no manual to say, well, if your house gets fire damaged, this is what you do. Like there's no two fires are the exact same. You could have slow burning fires, fast burning fires, plastic fires, natural fires. So it's very, very subjective business. So really you're thinking on your feet all the time, and you're designing remediation and reinstatement sort of bespoke to every project. So really very, very small claims, there's no real point to pointing a loss assessor. Deal with the claim yourself with your local builder. Yeah. But if you go into situations where you have a pipe leak, a very bad pipe leak underneath the floor or an attic space, you don't know how long it's going on, you have mold growth, you have spores, you have increased relative humidity. So the damage you can see is the easy part to identify. It's the secondary damage, or the potential damage that comes down the line that you can't see. It's knowing how to identify that before it happens, because you have a very, very short window to present your claim to your insurance company. And your insurance company, most insurance companies in Ireland are perfect, fine to deal with. There's no issues, but it's all about identifying what has been damaged and what's the correct remediation procedure for that. So people often give out about their insurance company saying they didn't give them enough money, or they're out of pocket, or they only 6 months down the line they missed something, they forgot it. But it's not the insurance company's fault. It's because if you haven't taken the initiative to present your claim, assess it, identify every bit of damage that's been caused by that, then you can't really hold the insurance company accountable to say, because the insurance companies, it's not their job to basically assess it. Their job is to adjust it and regulate it, if you like, So
that's the reason why you should hire a loss assessor, is it?
Yeah, well, I suppose the reason why you should hire a loss assessor is because, number one, on day one, you're going to find out exactly what damage has been caused by that incident. You're going to identify what's going to happen maybe in a month's time when the property starts to dry out. What are the secondary effects? What's going to happen to the plasterwork? What's going to happen to the timber floors? What's going to happen to the timber kitchen units? What's going to happen to the electrical system? What's going to happen with mold growth? So essentially, that's why it's very, very important to, if even not hire somebody, but just get sort of a survey carried out to identify, is this something that we can add some value to, or is it something that you're better off handling yourself? Typically, if you've any more than one room or two rooms damaged, you usually run into a bit more difficulty. You're running into health and safety legislation. You're running into sort of health and safety authority, PSDP, project supervisor design phase. So I typically would deal with claims upwards of €10,000 upwards to sort of 2 or 3, 4 million, that sort of level.
Yeah, and is it part then of the role of the loss assessor? You don't hire then or instruct a subcontractor to fix the repairs. You just identify what needs to be done, is it? Or do you get involved in that process?
Yeah, well, so if you have if you have something that requires immediate mitigation, so you have a tarp to put on the roof or you need an emergency plumber, listen, you're not going to leave the person there with no contacts. So what you would do in that situation is you'd always help people out, find the contractors to do the work. I don't employ them ourselves. We're a financial services company. That's what we do, is we look after the numbers, if you like. So, but we have extensive numbers of contacts in the industry for mitigation contractors, board of contractors, engineers, architects. So we work very closely with our clients in relation to find out what the best road for selecting contractors and helping them with that. We don't employ them directly purely because of PI benefits or the implications going down the line. So we always help people out. But then, because I'm a registered building surveyor, I can actually supervise the reinstatement works, not just assess it. So I can supervise and I can actually sign off on the project. And then that's something that can be included in your claim for the supervision of the reinstatement work. So it's another area that we sort of, a unique selling point that a lot of loss assessors wouldn't be registered building surveyors as well. So we bring a lot to the table, if you like, in that regard.
So if I'm, say for example, I'm a homeowner and maybe I'm a first time buyer, I've just bought my house and I have to get insurance, house insurance on the property. There just seems to be so much choice and option out there. What should I be looking for? What's the perfect policy for me?
Yeah, well, there's a lot of, like anything on the internet, David. There's a lot of noise, a lot of people looking for your eyes on the screen and bits and pieces. So it's about recognizing that not every insurer is the same. So it's about talking to people like myself, people in the industry, insurance brokers, local insurance broker. People are forgetting about them. They're going online. The problem is, that's fine, but you don't know what you're buying. You're buying a 100-page complicated document, which contracts inside out, David. How long will it take you to look through an insurance policy and advise a policyholder from scratch? Buying insurance for a policyholder is not natural, if you like. It's not a natural thing that they look at policy exclusions, terms and conditions, the benefits. It's only when you're in the industry that you will realise that, well, listen, you should have this cover, well, you shouldn't have this cover. So I would always recommend talking to a local insurance broker, because they'll know how that insurer will deal with claims. What are situations, or what's the situations in your locality? So you geographical issues, like in Cork, you have subsidence. So you want to be very, 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 very careful about who you insure with to make sure particular exclusions don't apply. So that's why the role of the insurance broker, I think, is coming back around again. And I believe that if you can save 50 quid by not going to insurance broker, it's a bad 50 euro to save, because you're not going to get that on the back end. If you buy it direct with your insurer, that's your basically direct lines. You've no one there to mediate on your behalf in the middle. So I suppose another thing to look at would be to make sure that you have the correct sums insured for both your buildings and contents. So people say, what's sums insured? I bought the house for 100 grand. Listen, is that not enough? You say, you might have bought the house in 2013, might even worth nothing. But now the rebuilding costs, as per the Society Chartered Surveyors, say that house is 200 grand. So in order to basically make sure that your contents, buildings, or sums insured are correct onto the Society Chartered Surveyors, read your policy if you can, but better off get a broker and get them to read it for you.
And so if then, in the event of a claim or an occurrence happens in your house that you might need to make a claim, how can you protect yourself to make sure you're not out of pocket?
Well, I suppose, number one, you need to make sure that you don't prejudice your position. So you have a loss in your home, you can't just go ahead and do whatever you want. You have to basically, stop the damage and occurring, mitigate the loss, fix the pipe, board up the window, put a tarpaulin on the roof, whatever you need to do. Emergency repairs to stop any more damage occurring. That's really it. What you need to do then is you need to fully document that. You need to photograph it. You need to do videos. You need to basically, because it's up to you as a policyholder to demonstrate to your insurance company what the loss is, what happened, the full circumstances. So that's what I would say. Number one thing, stop the leak, fix the roof, whatever it is. Take photographs, take video, try and paint the best picture you possibly can. Then decide whether is it something that you want to handle yourself. Are you confident of assessing exactly what's going on behind the walls, or what's going on to the plaster work, or do you think there's more there than what's there? So it's about getting a sort of no obligation survey off someone like myself. to come in and give you the peace of mind and give you the reassurance that yes, something is damaged or something's not damaged. Don't worry about it. But I suppose you will only know that when you go through the process. Like you can get a builder in to basically give you a quote. But if you have a builder who's predominantly a roofer, he's not going to be worried about plastic work inside or timber floors inside or electrics or plumbing and insulation, that sort of stuff. Conversely, you get someone in who's interested in fitting wood floors. They're not going to be interested in plaster work and decoration and roofing. So I suppose trying to get someone who knows how to encapsulate the whole claim with a building surveyor like myself does bring a bit benefits to the table. And it means that I suppose on day one you have a very accurate picture of what way your claim is going to look like.
I suppose it's very important that each the insurance policy holder makes the insurance company aware of all material facts at all times.
Yeah, well, I suppose historic day today, isn't it? It's the 1st of September, which is the Insurance Contracts Consumer Act 2019 is implemented, where it actually takes away good faith. Good faith has nearly gone in insurance policies because the insurance company now have to ask the questions they want answered. They don't have up to now, it used to be the onus on the policyholder to be expected to know what information is material or what relevant or what should be prevented the insurance company. So now the good faith is gone. But I suppose the insurance company, when you take out an insurance policy, you're taking it over the phone. They don't know what your house is like. It's up to you to basically tell them what you have. Do you have a flat roof? What types of windows do you have? What types of alarm do you have? What size is the house? Is it detached? Is it semi-detached? Is it a dormer? Is it a bungalow? I suppose that's the underwriting criteria where your insurance company will base your premium on. And if you misrepresent yourself and basically give them false information, like if it's a minor misrepresentation, you probably are going to be fine. But it's always best to volunteer the information that's requested and give material facts accurately, because I said it's only when you come down the line, when you make a claim, all that stuff is going to be investigated at that time. So really material facts are material to the policy, the contract. So I said it's very important to make sure that
in your time, I'm sure in insurance claim solutions, have you noticed a change in the industry from yourself when you go to assess claims and the role of technology is now playing in assessing claims?
Yeah, well, I suppose we've recently invested in some 3D virtual walkthrough hardware and software, which allows us to go in on day one and create a 3D digital twin of the building in full 4K high definition. So it means that we can go in and sort of with full accuracy document every bit of damage that's in their property, document every content, every book, every cup, every saucer, everything that's in that building, to make sure that we can then revisit the site unlimited amount of times from a desk and then present the client's claim comprehensively and be able to basically present that with the evidence through the virtual walkthrough to the insurance company, so the position of power is reinstated to the policyholder. So if you traditionally, we go in, we have a fire damaged building, you go in and take 100 photographs scattered all over the place. You don't create a full replica of what's there. You're not able to measure from them photographs. You're not able to basically collate the damage, but you're not able to see exactly what your eyes would see. So we've started implementing 3D virtual walkthroughs on our larger claims, just to enable us to have more complete, accurate, and comprehensive claims to get them settled faster for policyholders, get the reinstatement works carried out. So I said if you can document the loss very quickly, you can then go ahead and get works started immediately, if you like. So
yeah, we kind of touched on something there to start, the COVID business interruption claims. What exactly is that? How do you qualify for one of those claims?
Right, so basically what you have is you take out your insurance policy. If you're a business owner, you may have buildings cover, you may have content, stock, fixtures and fittings, but what you also have business interruption. So business interruption insurance is the loss of gross profit for a period if you're closed due to a fire, or a flood, or a big leak, and bits and pieces. So some policies have extensions some policies have extensions which will give you, if it's a notifiable disease on the premises or within 25 or 40 kilometres of the premises, then your policy will cover you if you're closed down by a regulatory body or statutory body because of that, and you're not able to enter your premises. Then, whilst you don't have any material damage on the buildings, you're not able to operate because of the restrictions due to the infectious disease. So some policies, they're written in some way. So some of them infectious diseases they exclude certain diseases. Some of them include certain diseases, and some of them have no restrictions at all. So the policies that exclude certain illnesses, it won't have COVID-19 exclusion, but what it will have is a SARS, sudden acute respiratory syndrome, which is COVID is the family of. So there's no cover there, because that falls within the pathogen family. So that's an exclusion. There's some policies there that will have an extension that has to be a specified disease on the policy, and there's specified diseases that are covered. But there's a cohort of policies there that don't have any exclusions on the infectious disease. It just has to be infectious disease as notified by the local authority. And then policies are the ones that are paying out and are subject to high court proceedings at the moment, because the policies are written so loosely that if you look at it, a layman or a solicitor looking at the contract law, it doesn't exclude for COVID. It includes, you're looking at the policy, it includes for it. But I think a lot of the issues, some of the big insurers in Ireland, which is currently, I'm not going to say any more about, was currently before the courts, and there's been a central bank document yesterday on it, that there is cover there, but it's just, they're just burying their head in the sand until such a stage where a test case comes out, because if you read the policy, it's covered. It's just the catastrophic fallout that's going to come from it. For insurers, I think it's one of the things. It's interesting to see over the next couple of months where it's going, David. And
do you think that was not an oversight, but the thinking at the time when those policies were drafted, that a COVID-19 pandemic would never occur?
Yeah. Well, I suppose it's not what the policy is originally designed for. The policy is originally designed for local outbreaks in the premises or next door or in the industrial estate or whatever. So that's what it's designed for. Okay, but it doesn't specify that in the policy. The policy doesn't have any exclusions for that. So you could, once you have an outbreak within 40 kilometres of the premises, that policy theoretically should kick in. And some policy, and this is the sort of the other thing as well, some of the policies have no limits on them. So you can theoretically be claimed for 12 months or to be closed 12 months or 24 months, depending what your indemnity period is, which is the period that your insurance will cover you for loss of gross profit. You can be covered for that amount of time, and you could basically recoup all your losses for that period. So that's why the issues are now before the court, a couple of high profile issues because of that. The policies are so open wide, if you like.
Yeah, I think it's an interesting time, isn't it? We'll see over the next couple of weeks how it pans out, and I know there's a live case at the moment going through the courts. Can I ask you a question then? Our main office is based down here in Cork. We have an office in Dublin as well, but there's certain areas in Cork City and suburbs have residential homes have real issues getting house insurance to satisfy a bank, or if you draw on a mortgage, due to what they label a subsidence issue in the city. You know, what exactly is subsidence, and where has all this attention towards subsidence got?
I suppose, like everything else, building has got more complicated over the last few years, and whereby it's got much more expensive, where techniques for remediating subsidence damaged buildings that used to be done by a local builder. Now, there's specialist companies all over the country now that design these systems to. But in that, when you're buying technology, it's a lot of money. Like, it's very, very expensive. The cost of subsidence claims are astronomical. They're through the roof. Yeah. Most of the money's in the ground. Like, you're trying to stabilize something that is naturally moving. You're trying to fight against the nature, if you like. So subsidence, I suppose, an underwriting criteria, obviously insurance companies, they can't, they're not going to continue to write subsidence policies because it'd be counterintuitive. Because if they have identified a hotspot or an area that has bad ground, usually it's due to bad ground or sort of flooding or stuff being made on filled up ground, or the quality of the bearing quality of the soil is not great. And what happens is when people are now looking after their homes more than they would have traditionally years ago, if you had a crack in the building, you'd fix it and you'd paint it up. Now, if you have a crack in the building, you call an engineer in, and it mushrooms from being a crack repair, you go into an underlying issue, going into the foundations, going into bits and pieces. So, you could theoretically look at a subsidence claim. I settled a subsidence claim last week for €285,000. And it's, to all intents and purposes, it's a bit of cracking on the wall. So, but to stabilize a building is a very, very expensive process now, especially now because you need engineers sign off. You have problems with access. You have people building extensions. There's no way to get into buildings anymore. Then what you have is you have people spending a lot on tiles and landscaping. You have people getting rid of grass, and then you put in hard surfacing in, so you have more water where it shouldn't be. So there's a load of different things going on at the moment in relation to subsidence. But Cork, I know, is a hotspot for that. I know a lot of people actually they're subsidence specialists based in Cork, and that's what they're.
But there seems to be a practical issue for, say, a first-time buyer that has got their mortgage approved, has gone sale agreed, about to purchase the property, and they're trying to get insurance. And their house they're purchasing may not have any subsidence issue, but because it's in a hotspot or known hotspot for subsidence, they can't get a policy. Yeah,
well, it's more so it comes down to the flood mapping, and it comes down to the geographic location. It comes down to the underwriting criteria. You can't blame an insurer who's not going to write a policy for somewhere that's much more likelihood for something to occur. But the difficulty is banks don't draw the distinction. Banks want the insurance policy to cover subsidence. Be it, I know a couple of brokers that I would deal with would sell very niche policies that would cover that with very, very high policy excesses. So. But they'd be high premiums, they'd be based in London, they'd be Lloyd's of London, they have lots of other conditions. They wouldn't be as good as the policy that you buy off Zurich or Allianz or RSA, but then policies wouldn't be available for them policyholders. So I've seen it there that it's difficulty. I would say I get 1 or 2 calls a week off people saying, well, do I know someone who would give house insurance for subsidence? And thankfully I can look after people, I can give them contacts, but they end up paying maybe double the premium of somebody else with less of the benefit.
That's the nature of it. Listen, Trevor, thank you so much for your time. That's been a really interesting conversation. If anyone wants to get in touch with you, where's the best details to find you?
Yeah, so I'm online, obviously, at insuranceclaimsolutions.ie. I'm on LinkedIn, reach out or connect with anybody there. I'm available, all my contact details are there. So, David, it's been great speaking to you, and well done on the podcast.
Thank you.
It's nice to get a mix of business and law, and it's great to be on. So thanks very much for the opportunity.
Well, it's been an absolute pleasure, Trevor. I wish you all the very best. Thank you.